If you do not own nor operate a business, please do not include business losses on your tax return. No matter how high a refund this provides, if you are selected for a review by CRA and you are unable to provide supporting documents, CRA may deem that you provided a false or misleading tax return and may be assessed for gross negligence penalties. If you are claiming employment expenses like motor vehicle expenses, home office expenses, cell phone, etc., this is especially relevant to personal support workers, some traveling nurses, and some commissioned employees. Then you must have a T2200 which is signed by your employer. Otherwise, if you are selected for a review from CRA and you are unable to provide supporting documents, the consequences could be severe. Common trigger areas for CRA audits of individuals are business losses, business investment losses, rental losses, donations, medical claims, moving expenses, and employment expenses. If you have any of these included in your tax return, please ensure that you get a tax professional to review your return prior to submission to CRA. If you do not prepare your tax returns yourself, please ensure that you do your homework when selecting a tax preparer. It is always best to use a chartered professional accountant since they are regulated by the Chartered Professional Accountants of Ontario, and you have potential recourse should there be a tax preparer error. Remember, the cheapest alternative can sometimes turn out to be the most expensive. Check your tax returns before submitting it to CRA. Do not leave it to a third party to check your tax returns. It is you who the CRA holds primarily accountable for your tax return. If your tax professional does not want to review your tax return with you, my advice to you is to find a tax professional who will. This is too serious an issue to leave to chance. Remember to file on time. Individual personal taxes are due on April 30th. Self-employed individuals and their spouses are due on June 15th. Consider deferring deductions of certain discretionary amounts like your RRSP until your income is high enough to warrant this. This way you will maximize the tax benefits of these deductions. Consult with your tax professional to determine if this is an appropriate strategy for you. Finally, if you are a young adult over the age of 18 years, even if you have no income, it is advisable to file a tax return. This is because you will receive GST and HST credit checks from the government. We do hope that you have found these tips useful.